Give it 3 minutes. That's right.
Let's go to oil.
Oil.
So we got oil numbers coming out 10:30.
Okay. So we'll zoom in on oil first. So kind of all the markets, which is remarkable. You don't normally see the crude oil market reacting to the CPI, but even the crude oil market, man,
Right.
8:30 this morning, 58.75, trades down 45 cents to about 58.30 on the news.
Yep.
From there, we've been bouncing around. So currently trading 58.62. Okay, we're going to jump into our commodity spreads we like to take a look at. We're going to start it off with crude oil. So let's take a look at the 11 o'clocks first and see where they line up. So again, oil's trading 58.60.
Yeah.
We're going to have an option here at 58.50 to line up a bullish and a bearish trade if we'd like. Okay, 58.50 up to 56. 58.50 down to 57. That's going to be interesting to see what kind of premium they have in here with everything going on in the market, even with oil reacting to the news. This is going to be our bullish trade. We're going to have about 15 pennies of intrinsic value because we're trading at 58.66 right now. That would be our buy, $29 to the positive side. That's going to be our sell, $14 to the negative side. And again, this one's going to be more expensive because we have about 14 pennies or $14 of intrinsic value. That's kind of the difference of the two contracts.
Yes.
So you're looking at $43, $44 between those two. Not bad when you consider that we're away from the middle point, right? I mean, this seems to line up fairly well. Now let's just jump around real quick to the noon, see where those price points line up. So they're going to be slightly different here, okay? So we had 58.50 being our focal point on the 11 a.m.s. For the noons, because these are getting set when they open, so the 11 a.m.s go from 9 till 11, so they're kind of getting set at about 9 o'clock.
Yep.
The noons go from 10 till noon, so they're getting set at about 10, right? So these line up at either 58.25, or we could line them up at 59. Now, we've looked at this before, right? So this trade would take on a slightly bullish, the 11 a.m. Slightly bullish, only because that's where you're going to have some value. So if you're buying this at 58.80, the contract's at 58.65, you only need 15 pennies to the upside to break even, right? Whereas to the downside, you're going to need the full $45 or 45 cents below 58.50, so you're going to need to trade to 58.05. You're going to need about 60 cents to the downside to break even. So you can see it becomes a slightly bullish trade when you're up there. Now, what if you were just slightly bearish, right? Well, that's where these might line up well. So let's take a look at maybe using the 59, okay? So you still want a volatility trade maybe, but maybe you want to have the intrinsic value to the bearish side.
Yes.
So here's where this is going to be your bullish spread from 59 to 60.50.
Yeah.
And then there's your bearish one. Now on this one, the bearish one's going to be the more expensive one because this one you're going to have 35 cents of intrinsic value. So that's going to cost you 45 pennies to the downside.
And that's good to noon. Okay.
And that's good till noon. And this is going to have $10 because realistically you are a full 35 pennies out of the money on the bullish spread because you start getting value at $59. So you're looking at $55 for a noon spread compared to 45, but this takes on a much more bearish angle.
Yes.
Because you have 35 cents of intrinsic value in your bearish spread. So last one to jump around at, let's see where the 230s line up. So the 230s, this would be a good, I'm just going to jump really on the dailies real quick to see. Okay, so they both, this is good. We'll do a quick comparison. We got 7 minutes till those EIAs come out. So this goes, now we just looked at the noons, right? These are $1.50 spreads.
Okay.
Now when you go to the 230s, the ones that get set at 8 in the morning are $3 spreads. And then we'll jump real quick to these, which are the dailies, which are going to be $5 spreads, okay?
Yes.
So first, let's take a look now. We have the 59 to 60.50 at noon. We're going to replace that with 59 all the way up to 62.
Yeah.
Now, you can see the bid offer and how things change, and I'll go over it, but not only are you paying, realistically, most of that premium is going to be for the 2.5 hours, okay? Because you have an extra 2.5 hours in there. So you would be buying the bullish spread. This one's costing you 18, as opposed to the noon was costing us 10, right? So you're paying an extra 8 pennies for the 2.5 hours, but you're also paying it for the profit potential up to 62. And on the flip side of that, going 59 to 56, here was our 12 o'clock, $1.50 down, and you can see the difference in the bid offer. You had 58, 53 to 56. Now you got about, let's just say you would be selling this spread, right? Because you're selling it. You have about 39 cents of intrinsic value. So that's going to cost you 56 there. It's going to cost you 18 there. You're going to be looking at about $74.
Yeah.
And so you'd need 74 cents of movement,
That's a lot of movement
away from 59.
Right.
Now,
But yeah,
you already have 40 to the downside.
no, I
And
see
that's what
that.
I want to
Okay.
kind of show. Now,
Right.
the thing that we talk about all the time is, what's cool is, so these are $3 spreads. What's going to happen probably, these line up the same exact way. Check this out. So these are going to be $5 spreads, same exact time, and they're going to be almost identical, right?
Right.
So check that out. This is a great example. 59 to 62 or 59 to 64.
Yep.
And they're almost identical. So if you're going to make this trade, you would want to make it with these, right? Because
For
if,
sure. Right.
you know, the anomaly time, the outlier time where you do get more than $3 of movement in oil, why would you not want to have that potential when you're paying literally, I mean, the market's tick for tick with the profit potential for that $2. So here would be your bullish spread again. You'd be buying it. You're about 38 cents out of the money, so that's going to be your cheap one on the bullish side. You'd be selling the one $5 down from 59 to 54 instead of the one 59 to 56. Same expiration time.
Yep.
Selling that, that's going to be the one with all your intrinsic value. So you're paying 54, paying 18. There you go, $72, $74, pretty much
Wow,
just
isn't
in
that
line.
wild?
Yeah, so it's pretty cool. So we'll see. I mean, that does get expensive when you're looking at it. You know, you would definitely want to have a bearish bias,
Right.
I believe,
Yes.
if you were trading this,
Right.
because now as we say that, look at that jump that we just got.
Yeah.
We're up to 58.70, 58.71. But you would, because if you're paying $72, which is 72 cents, and you need, you know, if you were bullish, well, geez, you need 30 cents just to get to the floor of the bullish
Right.
spread, and then you need that same 70 cents. So you need a
That's pretty
dollar to the
intense.
upside to break even
Right.
on the upside, whereas you'll only need about 30 to 40 cents to the downside to start breaking even. So that's how you can see where that bias would take shape.
Yeah, so let me just pull this up for a second. So look at that gold contract go. I love it. $17.
Everything's moving. You got it, man.
Everything's moving. Okay, so
Of course, we're coming right in. We
Yes.
get the news coming in
Yeah.
3 minutes.
you stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials right now up 19. NASDAQ, look at NASDAQ. The NASDAQ is up 46. S&Ps are up 6. We have gold up 17.30. Silver's up 20 cents. King Dollar's down $1.77. 177 ticks. Tommy and I come right back, folks. Stay right there. Welcome back, folks. Volatility, we have it in spades. You got the Dow right now up 64, NASDAQ up 65, S&P's up 13, gold's up $20. You got King Dollar down 292 ticks. Oil numbers come out, and look at those oil numbers.
Look at that. So we're 12 minutes past the numbers. They come out at 10:30, and we are already almost a full dollar up from where we were trading at before that news. We were trading at 58.60. We're trading right now 5 pennies below 59.60.
Amazing.
And let's jump back into that news numbers. So here are the numbers incomplete. So headline number, crude oil, 1.8 million barrels. Estimate was
Look at
3.1,
that.
so a
Wow.
little bit less oil than they thought,
Yeah.
right? Less supply. That should be an increase in price, so
Yeah.
it's reacting. Some of the different ones, though, gasoline, you had 3.6 million barrels. Estimate was 1.8. Cushing crude, a decline of 3.6 million barrels. PAD 3 crude, an increase of 6.1 million barrels. Distillates was down about 500,000. Estimate was break even. And they go down further and further, but pretty remarkable. So let's get back into kind of compare some of those trades we were looking at real quick. So again, we're trading 59.60. What's
Yeah.
nice is we are literally a square dollar from where we were trading at before
Right.
that news came out, okay? So here's our 11 a.m. trades we were looking at. Okay,
Right.
11 a.m.'s, the focal point was going to be 58.50, okay? Oil was trading at 58.60. So we had 10 cents of value in the bullish
In the
trade.
up one, right.
Yeah.
Okay.
So this really reacted nicely because we had a little bit of a head start, you could call it, to the upside,
10 cents,
right?
yep.
So if you wanted to sell this position right now, you could sell out, max profit 110, so you're taking back 110.
And I think that was 45 cents?
45,
Yeah,
right.
right.
45 cents, $45. And so that's a nice position. And if you ever got the turnaround in the next 15 minutes, you'd still have your bearish position open.
Yeah.
You'd have value below 58.50. Okay, so that was your 11 o'clock. That was really nice because we had a head start to the upside already.
Right.
The noons were going to be a little bit tougher because they were the ones with the bearish bias, okay? Because they had the focal point of 59.
Right.
Okay? So we were trading at 58.60.
So you need 40 cents before you even get in the money.
To the upside, correct, right. Well, you know, if you get a big move down, you already had a 40-cent head start to the downside when you were looking at, let me line these up. So 50, Yeah, 59 to 60.50 would have been your bullish trade. 59 to 57.50 would have been your bearish trade. This one is now, of course, massively out of the money, as in 55 cents, so there's almost no value here. But guess what? This is going to be your bullish trade, okay? You're at 59.56. Market's pretty much right where it is. This would be the one with the amount of value. If you were to sell this position, you'd be able to sell it out at about break even right now.
Yeah, because the extra hour cost us another 12 cents or something.
Total,
yeah,
right. 10, 12 pennies between the two contracts. So that was about $55 trade, or 55 cents a movement away from 59 you would need. Now, you still have an hour and 15 minutes in this trade.
Oh, yeah,
so here's a cool element to this, right? You just got the bounce, so you could sell your bullish position.
Yep.
Break even, okay? And even as we speak, it's climbing, so you make a little bit of a profit even. Well, we got to move quick, man. Oil's rocking. So you close out the bullish position, and then maybe you get a pullback, and this position remains open for the next hour and 15 minutes, and anything below $59 you start taking value to. And you're
Which isn't that far.
No, and that's you know, on the 11 o'clocks, you're now a full dollar away. That would be tough with only 15 minutes. But if anybody follows these numbers, in the next hour and 15 minutes, reversals are definitely possible, okay? Especially when you're talking about a move of $1 in the span of 15 minutes one way. All you need is a 50, 75 cent move back down, and you start getting value to the negative side. Maybe if you were bearish to start this trade off, that might be a real nice one, because you said, man, I kind of lucked out here, right? I got the way I wasn't even thinking it would move. I've broken even already, and if the market just decides to pull back in my direction, you have value to the downside. So pretty cool. We'll check back in at the end of the hour, see where we get. But anytime you make a volatility trades and you get $1 movement in the first 14 minutes after the news,
huge.
You can see the type of moves and the prices that it sets, for sure.
And so folks, just come over to our website, TFNN, go to the NADEX banner, one on the top, on the side, pull it up, get that demo account going. Volatility's out here in the markets.
That's for sure. And natural gas is tomorrow. We got another one, 10:30 a.m. Eastern time. Natural gas inventories. We'll do it all over again.
Big time.
Totally.